Good morning, hello, and welcome to Moneycontrol's live stream. You're watching Opening Bill with me, Lavi Shadarad. Well, it's a fresh week. We are coming off from a weekend holiday, but yes, Saturday was the special Muhurat trading session, and markets also ended positively. So, a strong start for the summer 2081, and hope you all had a very happy Diwali as well. This week, markets are headed with a heavy daily packed week as well. We have US elections, Fed's interest rate outcome, ongoing September quarter results as well. So, all in all, a lot of events that are expected to sway markets in either of the direction. If you look at GIFT Nifty, that is pointing at a flat start for the Indian markets. So, we'll be seeing whether the positive momentum or the negative momentum sustains throughout the day or not. But lots more lined up in the show. We'll be discussing what your trading strategies should be at this point of time, and we'll also be addressing your stock related queries. So keep posting them. And if you look at fund flows data, foreign institutional investors, they continue to be net sellers in the previous trading session, selling to the tune of 200 crore rupees in the cash markets. Domestic institutional investor DIIs, they also remained on the sell side and sold about equities worth 377 crore rupees in the cash markets. Now, just a couple of minutes before we hit the opening bell, let's take a look at the pre-open rates. It's still at the flat start for the Indian markets. We'll see if any buying builds up throughout the intraday session as well. But on that note, let's get on board with our technical expert of the show, Ajit Mishra of Religare Broking. Ajit, good morning. So good to have you on the show.
Yeah, good morning, Lavisha. Yes, same here. So we are back after a long weekend, and we are hoping for a good start for the market as well.
Yes, yes, Ajit. Ajit, as I was talking about the FIs, they've continued to be selling in the previous month. Every single day they have sold off. How do we expect the November to pan out then?
So yes, it was a tough month for the bulls because after a long, and steady up move, last month we saw a decisive a sustained selling from the FIs, and that was reflecting in the market levels also. Means on every bounce, we were seeing some selling pressure coming in. So last week also, Lavisha, we've made multiple attempts to cross the first hurdle that we have around 24,500, almost thrice, but we couldn't surpass that zone and drifted lower. So for this week also, we feel that this range 24,000, 24,500 will be critical to watch out for, and either side break would decide where we are heading in the coming days. So if bulls manages to cross this hurdle of 24,500, then this recovery may extend further, and 25,800 is something that it might test. But
Okay.
on the other hand, in case if we fail to hold 24,000 mark this week, then we are heading towards the major support area of long-term moving averages, which is placed around 23,500. So broadly, this range is intact as of now, and one should be like playing more of stock-specific approach until we see this break.
Okay, all right. So 25,800, fingers crossed. Let's see whether we can reach that levels as well. But Ajit, Bank Nifty, that is now off nearly 2,800 points from its record high levels. What are the new levels that the traders can watch out this week?
Yes, so Lavisha, last week the major concern was IT, which was showing resilience for last several weeks. Also, witness pressure. It shed roughly around 3.5%. During the week. So now the only hope that we are left with, to push the index to above 24,500 mark is banking. Why I'm saying this? Because in the last almost 3-5 occasions, we have seen this level of close to around 51,000 acting as a very strong support. On the closing basis for the banking index. But upside is still capped close to around 52,500 is something that it is facing resistance as well. So as of now, the tone looks positive to us until we break 51,000 mark. But for any momentum for fresh buying or any attempt to inch toward the record high, we need a close about 52,500 level as well. So broadly, this 1,500 point is something that one should maintain as a key areas to watch out for.
Okay, all right. Ajit, Nifty Auto, that reacted well in the previous session after October sales figures as well. So, can we expect a further up move for the auto index?
So yes, see, last month auto index also slipped sharply, roughly around 10% kind of a cut, and uh, we have already reached to this long-term averages. When it comes to the Nifty Auto Index, which is placed around 23,500 mark. So due to the oversold position, we are seeing buying interest or recovery, you can say, in some of these names. But not all stocks are participating in the move. So one should be focusing on counters which are outpacing the index and the pairs as well. So stock like iShares, stock like TVS, Hero Motoco, these are some of the names which one should be focusing if the view is short term.
Okay, so since you mentioned selective stocks, what about M&M? Because M&M did fairly well in the last session and they saw record SUV sales also in the October month. So what does it look on the charts though?
Yes, so M&M also rebounded in the last two trading session, and it has reclaimed its short term levels also, short term moving averages also. Uh, 27.75, that should be the stop loss if you are planning any trade in M&M. And upside, it can gradually inch toward 29.50 to 3,000 levels. So yes, alongside with the other three names, it also looks okay.
Okay, so 2950 levels for M&M that we need to watch out. Let's take some stocks in focus. Zen Technologies that came out with its blockbuster set of Q2 earnings. The defense player has reported four-fold jump in annual profit in Q2 and revenue also rose by threefold year on year. Ajit, Zen Tech on the charts. It had recently hit a new all-time high. So should we expect the bullish momentum to continue?
So the good part is it didn't participate much on the downside also, during the recent corrective phase. It's broadly hovering in this band, close from 1600 to 2000. And we are very closer to the upper band. So we might see some profit taking once we test that area again. So from the trading point of view, around 2000, one should at least book partial profit and maintain a trading stop loss at 1800 for the remaining position. Once we cross and sustain about 2000, then we can think about 2300, 2400 levels positionally. So as of now, around 2000 area, look to book some partial profit with trading stop loss at 1800.
Okay, 1800, that is the level. But we've just hit the opening bell. First rates that will be popping on your screen. So Bank Nifty, that is flat in trade. Both the benchmarks have opened lower. Sensex is down about 150 points, and Nifty is also, 1/10% cut. We can see on Nifty 50 as well. It is above that 24,000 mark, but still below the 24,300 levels for the Nifty 50 index coming in. Apart from that, we can see India Wix. India Wix has seen a sharp cool off, down about 7%, trading around that 14 odd levels. Apart from that, we can see the broader indices, small caps doing fairly better than the mid caps, but both of them flat in the trade as well. Apart from that, if we look at some of the sectoral indices, we can see, all of them now slowly reversing. Initially, they saw a bit of a positive start, but then now they've all been shrinking, blinking in the red. The only outlier is Nifty Auto Pack. That is up about 7/10%. If you look at some of the top gainers on the Nifty 50, they are ONGC, Coal India, Tech Mahindra, NTPC, and Axis Bank. And some of the top losers that are dominating the list, that is your Tata Motors, Dr. Reddy's, TCS, Kotak Mahindra Bank. So that is the first rates that is coming up, but we'll be seeing how the markets pan out during the session as well. But a key newsmaker stock in focus today is Lokesh Machines. Lokesh Machines has come under limelight after US have sanctioned around 15 Indian companies for supporting Russia's military industrial base. Now, Lokesh Machines' name has also propped up as reports claim that the company had been exporting machines to Russia since 2011. But the management later has clarified that it was not aware of the name appearing on the US sanctions list. But Lokesh Machines, Ajit, on the charts, the stock hasn't really performed well in the last 3 months. So what do we expect the near term holds?
Yeah, so it's almost 6 7 months, Lavisha, that we are seeing the stock hovering in a tight range around its record highs. But now there are signs of some cool off. The stock has slipped below its previous swing low, which is placed around 340 area, and today is down roughly around 6.5%. It usually see low volume, so corrections are usually sharp when the liquidity is concerned. So if somebody is holding any long position, they should definitely book profits or exit if you have bought it even at the higher level, because possibility of now inching towards 295 300 seems much higher with strong resistance at 350 55 levels.
Okay, all right. 355 levels, that is a strong resistance. Another stock in focus is Apollo Hospitals. The hospital chain announced a major expansion plan to add 3,500 beds across 11 locations in India with an investment of around 6,100 crore rupees over the next 4 years. Ajit, Apollo Hospitals, the stock hasn't really performed well in the past month. So, can we expect some up move post this announcement as well?
So yes, Lavisha, it's in fact doing comparatively better because if you see the decline from the record highs marginally means we were close to around this level of 7,300 in September month, and we are currently quoting around 7050. So it's a marginal retracement that we have seen in the stock, and it's a healthy consolidation that we are seeing in the counter. So those who are less prefer less volatility, this is a counter to be in. So with stop at 69.20, you can definitely look to go long, and gradually it can inch towards the record highs, means 7,300 mark and maybe higher. So yes, you can look to go long with 69.40 as a closing stop loss and initiate fresh longs.
Okay, initiate fresh longs that is coming in for Apollo Hospitals. Let's straight dive into the viewer queries. The first query coming in from Naveen. He's asking the view on Poonawalla FinCorp. Ajit, Poonawalla FinCorp, recently the stock hit 52-week low as well. So can we expect bearish momentum to build on from here on, because they came out with a very disappointing September quarter performances?
Yes, the decline was very sharp, but the recovery is equally, swift. Lavisha, the stock has, reclaimed its short-term averages, and now we are inching towards the, major resistance, which is placed around 390 400 levels. So if you are planning any fresh trade, 365, that should be your stop loss, and if you have any existing position also, but upsides 390 to 400 will be the strong resistance area. So around that area, definitely you should book profit and let it sustain above 400 levels decisively to re-enter.
Okay, all right. 390 levels, that is the one that we need to eye for. Uh, Another query coming in from Arun Kumar. He's asking that whether he can buy Trent at the current price for the long term of 10 years. 10 years horizon, Trent, it is going to come out with its Q2 update as well, Ajit, this week. What do we see for Trent?
So, after this phenomenal, surge that we have seen in trend in the recent months, the recent decline is also very gradual and swift. So, it's good basically that before the earnings, we are seeing some bit of cool off, and this decline may extend further once we break this 7,000 mark. So if somebody is holding a trading position, then definitely they should place the stop loss at 69.80 for the long trade. Otherwise, the stock might inch towards 6,600 6,500 levels also. In case of recovery, now 7,300 is going to be the first area of resistance. So for fresh buying, one should wait for a dip towards 6,600 levels or a breakout above 7,300 mark, not in between.
Okay, 73,000 that we 7300 that is the level that we need to watch out for trend. Another query coming in from Adit Taneja. Ajit, he is asking, should he buy REC for the long term from a view of 2 to 3 years? But REC, it hasn't really performed in the past month. The stock hasn't been doing well as well in the recent days. So where do we see for a long term perspective?
So REC is now we are seeing this base kind of formation around the long term area, long term averages. around 500 area. Uh, Upside also seems capped because 545, the 100 EMA is acting as a upper band. So this range basically is playing out right now from almost a month now. We are currently in the middle of the band, so I would recommend to wait and let it surpass 545 for any fresh position. And in case if it breaks 500 levels decisively, then in fact one can look to go short also with 525 as a stop loss and 460-65 as a position target area. So as of now, it is in the range. One should wait for a either side break to confirm this direction.
Okay, so wait and watch for the stock coming in. But another query is coming in for Adani Ports. Meet Dave is asking his views on Adani Port. Adani Port, Ajit, it hasn't been doing well, from the past 6 months. We can see a modest about 6% returns in the past 6 months. Uh, in the recent quarter update also, it saw a sequential drop in the net profit. However, year on year, it saw a good growth. But for the near term, what does Adani Ports look like?
So yes, Lavisha, in line with what we are seeing in the other counters from the Adani group, it's gradually trading with a negative bias. It has recently tested the long-term support zone of the 200 days of exponential moving average, but it rebounded also equally sharp from that area. So we need to sustain above 1420 mark for any meaningful recovery or attempt to inch toward the record highs. Otherwise, this sideways tone might continue. So if we have any existing position, 1330 should be your stop loss. But for fresh buying, one should wait and let it cross and sustain above 1420 mark.
Okay, 1440 mark for Adani Ports. Ajit, another query is coming in from Puneet. He's asking views on LIC for the long term. He's been holding it since IPO. LIC, if you look at today, it's trading around at 924 odd levels. It's still below its IPO price, which was the upper price band of 950. So, what does it look like for the long term LIC?
So long term, it looks favorable because in the last swing when the stock moved from 900 to 1200, uh, we are again trading closer to the neckline area of the same. So we expect this level on the closing basis to hold. This level close around 900 on the closing basis, and gradually again it can make an attempt to reclaim its record high or inch further higher. So the damage seems like already been done, and we have multiple supports around this 970, 870 to 900 zone. So one can continue to hold long-term positions even at current levels, and gradually one can wait for 1200 being the first target area.
Okay, 1200 first target for LIC we'll be watching out. Uh, Another query coming in from BU Dipankar. He's asking the views on BPCL. He's saying that it has not moved above that 310 mark from the last 5 days. BPCL, so far this year, it has been an underperformer, Ajit. Can we expect some positive momentum build on, or should we expect the consolidation to continue for the long term as well?
So that's right. In fact, the OMCs are not participating, in the recent rebound attempts also, despite crude, witnessing a sharp decline from the recent highs. So currently we are, very closer to the long-term support area placed around 300 mark. So that is going to be the critical support if somebody is holding any long position. And as you rightly mentioned, that 310 is the immediate resistance. So bias is still on the negative side. So attempt of retesting the long-term moving average seems much higher. So if you have any existing position, you may at least book partial losses if you are holding longs and maintain a strict stop loss at 300 for the remaining positions. Once we break 310, 315 decisively, then this stock may make an attempt of recovery towards 325, 330.
Okay, 329, 350. That will be the level that we'll be watching out for BPCL. Another query coming in from Alex. He's asking the view on Schläfer for fresh long. Ajit, how does it look like on the charts? We have seen the stock declining about 15% in the past 3 months. But how does Schläfer India look like for the near term?
Uh, Lavisha, can you please, okay, Schlepper India, okay. So yes, it's gradual decline in the recent months. So from the record highs of 4900, now we are closing trading closer to 3460 area. Seems like that the correction is almost done because we are again trading closer to the neckline area of the previous consolidation zone. So possibility of some consolidation is likely, and then it might make an attempt of recovery also. But low volume counters, so be strict with your stop losses if the view is short term. So 3300 should be a stop loss if you have any short term view. And in case of recovery, 3750 to 3800 is something that it might face the resistance first. Around that area also one can liquidate if the view is short term.
Okay, that is the view coming in for Schleifer India. Another stock in focus is by Satya. He's asking the please ask 1 year view on Nippon AMC, the safe entry levels for the stock. Nippon AMC, the stock has been doing well so far this year. Past 1 month, 3 months charts, all of them look positive, Ajit. So, how does the long term one view look like for the stock?
Yes, so in fact, the AMC stocks they have done well in this recent correction, and Nippon is also currently trading around the record high area. So if you are planning any short term trade, then your buying price or accumulation zone should be around this 695 to 680 area, with 665 being the stop loss. And once we break this 735 that 35 levels decisively on the closing basis, then we are set for a new high around 850 to 900. So one can utilize this prevailing corrective phase to accumulate the stock in the given range for the positional target of 850 to 900.
Okay, 695, 700 levels that we need to watch for Nippon Life as well. But another stock query coming in from Ashok. He's asking the fresh long on Aditya Birla Capital. Ajit, Aditya Birla Capital, it has been quite flat in the past 3 months, given about a modest four. I mean, declined about 4% in the past 3 months. So, how does AB Capital look like for the near term?
So it seems like a short-term top for AB Capital because the stock made an attempt to cross the previous swing high around 245 to 50 area, but it failed. And since then, we have been seeing gradual decline. The stock has already slipped into the major averages, and now the previous swing low, which is placed around 200 area, it's trying to form a base, a shorting pivot rather around that zone. So possibility of further decline towards 187 seems high. So if you have any existing position, you may liquidate at current levels and let it cross 210 or a dip towards 187, not in between.
Okay, all right. We have a stock in focus, that is your Ashoka Buildcon. The company secured an order which was worth about 312 crore rupees from the Maharashtra State Electricity Transmission Commission Company. Ajit, on the charts, Ashoka Buildcon, it has given stellar returns. So, what does the remainder year hold? Can we expect some consolidation or positive momentum?
So yes, in fact, from the last 3 4 months, we are seeing volatile swings in this range of 210 to 270, and we are currently quoting around 240 area. So it might consolidate further and form a base around this 225 to 250 area before making any further progress. So here also I would recommend to accumulate it gradually in this range of 230 to 240, with 25 being the stop loss and 270 the upper band of this prevailing consolidation range as an immediate target, and then 310.
Okay, just one last question, Ajit, before we let you go. What is your trading picks at this point of time for the month of November and for the long term as well?
Yeah, so see, BEL is one stock which, from the defense space, we have seen a very sharp recovery of late, and the stock has reclaimed its major averages. The indications are in the favor that this stock might inch toward 305, 310 in the near future. So short to medium term, one can definitely accumulate the stock in this range of 280 to 285, with closing stop loss of 270 and upside target of 310. At the same time, since we have started seeing some softening in the IT counters, Birla Soft has witnessed the fresh breakdown. So with stop at 570, in fact, one can go short in Birla Soft at current levels with 510 as a positional target.
All right, BEL, that is one of the pick, Ajit. But thank you, Ajit. Thank you for taking your time and hope we connect with you soon.
Same here. Thank you, Lavisha.
All right, let's just take a quick come to an end of this edition of Opening Bell. Don't forget to tune in for 3:30 p.m. for Closing Bell. We will be discussing how the market is developed and what the stocks are in focus. Until then, signing off. Stay tuned to moneycontrol.com for all the news updates and market insights.